It's like, I don't want to go across the Golden Gate Bridge or the Bay Bridge, but I may be okay going over a small bridge. But you get to the point where maybe you don't want to go across overpasses. So what you do is you start planning your route so you don't have to go over any overpasses. But then maybe you start not wanting to see bridges.
I'm Brian Mose, a farmer living in Florence, South Dakota, and you're listening to the Vance Crow Podcast.
Welcome back to the podcast. I'm glad you're here. Today, we welcome back John Jennings, who's President and Chief Strategy Officer of the St. Louis Trust Company and Family Wealth Office. John is an interesting character, one of the most well-read people that I know. And so if I'm going to sit down and talk with him, we're going to have an intense discussion about the economy. Of course, longtime viewers know that I have an intense interest on inflation, and John has a very different philosophy about the value of inflation and its impact on the larger economy. So you're about to hear two people have an extended conversation, and it's really something quite intense and interesting. But after we talk about the economy, John opens up about his own struggles with mental illness. He talks about the use of SSRIs and the experience of being somebody with OCD, which I really didn't understand until he laid out just how it impacted him and what causes people to struggle with these things in a deep way. We're going to get to that interview in just a moment, but I want to talk a little bit about legacy interviews. This week, I had a client come in. He had just had a unique experience because he had taken his fourth and final daughter off to college and was now going to be an empty nester. He sat down with me to record his experience of being a parent. He knows his life's about to change, and so he wanted to capture the memories and some of the experiences that he had, both good and bad. He expected that he would not show it to his children anytime soon. But he wanted to get it recorded because he thought once his life changes, some of these memories will be changed too. And he wants them to have an authentic understanding of what life was like, what he was thinking, and what he hopes for them in the future. If you're interested in sitting down with me to record a time capsule for your children someday in the future, go to legacyinterviews.com to find out more. All right, without further ado, let's head to the interview. John Jennings, welcome back to the podcast.
Thank you. Excited to be here. Loved chatting with you last time, so back for more punishment.
So if you were the trustee of a trust and you wanted to screw your beneficiaries, but you wanted to do it without going to jail, how would you do it?
Oh, without going to jail. Okay, got it. Well, first of all, so I think why you're asking this is I'm the president of a trust company, right? So I've been a professional trustee for quite a while. Before that, I was an estate planning lawyer, so I've dealt a lot with trusts and everything. If your question is, how would you take advantage of your beneficiaries if you're a trustee, if that's really it. So first of all, a fundamental duty of a trustee is to keep their beneficiaries informed. So you're supposed to send them, what the investments are and what the distributions are and fees and expenses and all that jazz. So the first thing you do is you wouldn't give them information so that they couldn't really, watch over you and what you were doing. So that's the fundamental thing. That's the first thing you would do. And I'll tell you, most trustees that are individual trustees, they don't realize all that they're required by law to give to beneficiaries every year. So this is actually a big problem. Individual trustees don't often give the information. Then from there, if you're saying, okay, I don't want to go to jail, so we're not talking like fraud, and we could talk about,
Yeah, we can do the illegal stuff.
We can talk about doing the illegal stuff. Probably the thing that we, if I were trustee, and let's say the beneficiaries were like, I don't know, some collateral family members of mine. And I was just like, these kids, I don't think they deserve all that they have. And I had some sort of chip on my shoulder. Probably the way to do it best would to break my trustee duty of loyalty and have a conflict of interest. And I would go I would start a business and have the trust invest in my business, right? So it'd be this cheap source of capital that is completely against a trustee duty. You're not going to go to jail for it because you could definitely be sued by the beneficiaries if they found out about it. I could be investing in real estate. Basically, I could just be taking advantage of the economics of the trust.
So then legally you are able to have a business that you would have your own trustee invest in?
No, you're not supposed to. So like one of the fundamental duties of a trustee is you're really only supposed to manage the trust for the benefit of the beneficiaries. It can't be, it shouldn't be something that benefits you personally at all. So in fact, anything you do that's one of these so-called conflicts of interest, the beneficiary can sue you for damages and also void the transaction. So I'll give you an example. So I know of a situation where there's this pretty big trust set up for some beneficiaries. And the father and the mother were co-trustees. And it was set up by the grandparents. And the father had a small but struggling hedge fund, right? And so the father and the mother invested money from the trust in the hedge fund. So he made fees on the hedge fund. And when he marketed his hedge fund, this investment from his kid's trust doubled the size of his hedge fund.
So then you can go out and say,
so when he marketed it, he said it's X millions of dollars instead of it being just Y million dollars, right? So that was absolutely a conflict of interest. That is not something they should have done. The kids, once they reach the age of majority, they have a statute of limitations, but they could have sued their parents as trustee and said, and by the way, the returns weren't very good. If you would have just invested in the S&P 500, you would have earned 10%. This hedge fund only earned 5%. Multiply that difference by the millions of dollars. Here's the damages. You should unwind this. Mom and dad, you owe us. They could absolutely have done that.
My sense when you were saying about you could just not give them information is the opposite of that would be to just inundate somebody with information.
Yeah.
I know that I grow frustrated with how many times my investment accounts send me paperwork that is just, it's just mountains of paperwork. And most of it is like, forget the first page. The last page doesn't mean anything. So you have just papers and papers and papers that you couldn't possibly read all of.
Yeah. So you could just be sending just the account statements and all sorts of stuff. Yeah. You could send everything. Yeah. But it's kind of hard to see even for a pretty complex trust. You still as a beneficiary can sort of figure out what's going on, unless you have. I guess if you're young, you have no experience in financial things. You see that it's invested in your dad's hedge fund, for example. You don't know that that's a problem. Maybe you don't go talk to a lawyer. After a period of time, there's a statute of limitations. You may not be able to sue them. So yeah, it could definitely happen.
With all that paperwork that people get, what is actually important of stuff you get in the mail about your accounts?
So you're talking if you have an investment statement, so you're invested at Charles Schwab. Yeah. So if you just have one account at Charles Schwab, it's just not. It's pretty easy. You get your monthly account statement. It's showing you, okay, here's the amount and here's the ins and the outs. The problem is if you start having multiple and just
you've got TD Ameritrade, Charles Schwab.
Yeah, you have all these different ones. You have an IRA and a Roth IRA, and you have a rollover IRA, and you have a your regular investment account. Maybe you have ones for your kids, and and what I do, I have a few different accounts just because I do sort of mental accounting. I have my main account, and then I have one that I add to every month. And the first one I try not to look at. The second one I have to look at when I add to every month. And then I have a third one that's a play account where every once in a while, against my own advice, I do dabble sometimes in individual stocks, but I try to keep it small, just like a little play account. But yeah, you get tons of statements and everything. But fortunately, when you go online, it's a lot easier to figure out what's going on.
So do you actually get all your statements sent to you paper-wise, or you do them online?
No. I look at them online. Yeah, absolutely.
And don't even store them in paper.
Yeah.
See, because I've felt a very strong pressure of well, you got to keep these. I don't even know for how long, maybe 7 years. It's all.
Yeah. Well, and I get that. So I talked to a prospect yesterday, the day before. So he sold his business for a bunch of money. He's interviewing financial firms. So he's talking to us. It was kind of a fun conversation because even though we work with pretty wealthy clients, you typically in that kind of $100 to $500 million range, some above, some below. But this person sold his business for tens of millions, but he wasn't really quite to the level that it made sense for us. So it was a great conversation because I was able to say within first 10 minutes, you're not a fit for us. And, even though you had a lot of money, kind of based on our strategy, we're not fit. But we ended up talking for an hour and a half as I gave him advice about the financial industry and, just the kind of the predators that would be after him. And he's interviewing these different firms and they're, showing him all this razzle dazzle and everything. But it was kind of interesting. He asked a question. He said, I have all this money now, and it used to be in my business. Like I could walk into my business, and we had like employees and we had a building and we had all these machines, and now it's just this number in my account. And once I invest it, like, how do I know that it's real? And how do I, it's just zeros and ones somewhere. And, what would happen if, there was some sort of terrorist attack, like some sort of EMP that erased everything. And it's a great question because I had a client that asked this, he's in his late 80s now, but 15 or 20 years ago, as everything started or continued to move from stock certificates and just actual bond, you had these bond certificates to things being in accounts. So people don't really use physical stock certificates now. It used to be when you bought a share of stock, you actually got a certificate. And to transfer the share of stock, there's this power of attorney form on the back, and you would execute it, and you would send it to the transfer agent, some big bank, and then it would change on the books and the record of the corporation. Now everything's held in what's called street name at a broker dealer, which basically they're all held through something called the Depository Trust Company in New York City. It's DTC. So all these brokerages have a DTC number, and all shares of stock. I mean, there are some certificates, but basically all shares of stocks are just electronic. And there's no way that you can go count. I mean, you lose completely the tangible aspect of everything, but it's similar to money, right? So, your $20 or $100 bill or whatever, it's not really the paper. It's the what stands behind it. So it's really just the financial system standing behind, do you really have these assets?
It's an interesting thing to think about. Like, what is it that you own and what is the value of it? I've been asking people this question. Is it wise to teach your children, let's say you've got a 5-year-old, they're starting to earn a little bit of money, to open a savings account? Is it wise to teach them that? Considering we live in an environment of 9% inflation. So if he takes his $10 and he puts it in there, it's, at best going to be worth $9.10 the next year. So is it?
Yeah, you can actually get a little bit above 2% on savings accounts now, though. So, versus what? What else would you have him do with the $10?
I don't know.
I guess you could spend it. So we deal a lot with, how do you raise financially fit children or the next generation? And yeah, absolutely. Like learning the power of savings and, I think is really powerful. So my youngest child is 20, so quite a bit beyond your 5-year-old, but she, had a great summer where she worked as a wait staff at a restaurant. And for her, she made a ton of money. Like she made thousands of dollars, and it's in her savings account. And it's just really given her appreciation. And she's had savings and stuff before. So, I mean, we started earlier than 20, her having her own account and her own money. But it's just really given her a great appreciation for, the value of money. And the fact that, her savings account's earning 2%. And inflation is running whatever, her inflation rate is. Because everybody sort of has their personal inflation rate, right? So, and in fact, she has a very low inflation rate. Because being 20, we still provide most everything, and the things that she doesn't really want to buy a whole lot. But yeah, I think it's great. It really gives you a sense for how much money is. So, for instance, like my older daughter, who's 23, when she was 12 or 13 years old, we were on a walk in our neighborhood, and she said, "Dad, like, how much is our house?" I said, "Claire, man, I'm not gonna tell you." And she's like, "Why?" And I'm like, "It won't mean anything to you. Like, you'll have no idea." And she goes, "Well, tell me anyway." And I go, "Okay, our house is worth $10,000. And our house was worth a lot more than $10,000. And she was like, "Wow, are we rich?" Right? So, she had no idea, right? So I think as you save more money, they start having sort of an idea of what's going on. So no, I think it's a best practice to start having kids save. And
I think this is probably my Peter Thiel paradox. Like what is it that you believe that no one else believes? I think it actually is unwise to teach children about a savings account unless you're using it to teach them about the wickedness of inflation, which let's imagine you're in the UK right now. I just read yesterday that Goldman Sachs is predicting that by 2023, the UK's inflation rate is going to be 22%, which would mean you put that $10 in, now it's worth, $8. Like it's, and that's going to compound over time, right?
Yeah. So I guess you're saying, instead you would say, instead of putting $10 in savings, you put $10 in your Schwab or E-Trade account, and you buy something that, has historically outperformed inflation, right?
Maybe. I mean, I think that herein lies why this becomes ludicrous, right? Like why inflation is the scourge that I think it is, because you have this system where it's like you're not enabled to save it. If you save it, you are actually losing money, and the government is stealing that money, or that's my perception of it, right? The government is pulling its value out, and so they're pushing you to invest that into the market, which is why, one of the powers of inflation is you say, hey, don't save your money, put it either into buying things or put it back into the market and let the market use it as capital to increase the velocity of money.
So you think that the government stealing the money? So what benefit does the government have from inflation? So I think we have a little. You and I have discussed inflation before, and obviously the inflation we have now is definitely too high. Like it's painful. It's causing all sorts of problems in our economy. So I'm not a fan of high inflation, obviously, but I'm of the view that a bit of inflation is healthy, which is the orthodox view in the economics profession, which doesn't mean it's right. There's a lot of orthodox views of the economics profession that have been proven wrong. But I don't know the government has intentionally created too high of inflation. I think it's happened, and there's a bunch of factors. And in fact, economists don't wholly understand what causes inflation.
Do you think so?
Yeah, I absolutely think so. I will tell you. So last year, maybe it was a year and a half ago, there was this great article in the New York Times called, what was it called? Okay, it doesn't matter what it was called. So, but the point of the article, and I read the Fed paper, was that the economics profession has long thought that expectations of inflation are a driver of inflation. So this is economic orthodoxy. I remember back when I was in college I took a lot of economics classes. This was this was one of the bedrock reasons why inflation occurs. I mean, there's others. And the Minneapolis Fed, and again, the Fed has more, economics PhDs than any other organization in the world. They have all the resources you could possibly have. So the Minneapolis Fed, a group of PhDs there, dug into this, and they determined that there is absolutely no evidence for that. And the opening sentence of the Fed paper was the economics profession is replete with ideas that are taken as truth that are actually errant nonsense. And I mean, here's one of the bedrock reasons. And then you have all the other factors. I mean, you had Milton Friedman saying that inflation is everywhere and always a monetary phenomenon. Well, it's not just a monetary phenomenon. It's not just the Fed. It's not just money supply. There's all these other factors that have you. Look at what's happening now. Part of why we have the inflation we do is supply chain issues. So that's not a monetary phenomenon. So, I think there's...
Wait, so you're saying that the reason that prices are increasing are supply chain issues, and that is the same as inflation?
Supply chain issues are contributing to the increase in prices, which is inflationary. So that's one reason. Too loose monetary policy for too long. Obviously, the Fed should have not kept rates as low as they did for as long as they did. So that's definitely a reason. All the fiscal stimulus that occurred, our government has spending, regardless of administration, we've been running budget deficits since the early aughts, and we just continue to spend like drunken sailors, regardless of who's in power. Then you had, COVID, where we were looking like we were going to have this horrible recession, and the government stepped in and put all this money into the system, which has continued. That's one of them. Part of it's just supply and demand, and supply has been constrained for various reasons, and demand is kicked back up. So part of the reason the Fed thought it was transitory is part of it was just you had demand drop during COVID, all the lockdown, and then it sprang back up. So if you're looking just year over year, you say, oh, well, we had a depressed year in terms of demand. Now it's coming back, so we're having accelerating inflation. So you have all these factors, commodity scarcity, some issues there with chips and things for batteries are everywhere, and hard to get some rare earth minerals, and we're going to run out of easy to get nickel and cobalt and all these other things. So there's all these factors that come into play that are creating inflation. And right now it's been sort of a perfect storm. And you flip back prior to last year, and the Fed couldn't reach its inflation target. They were trying to create more inflation than we had, and then they couldn't do it, and then it flipped.
You mean, I don't understand that. You mean they wanted to they were going out to the market and saying, we think that inflation should be at this rate?
Yeah. So they if you kind of look at the history of the Federal Reserve and its communications, it's sort of fascinating. So you can remember, back in the 80s and even into the 90s, they didn't announce what their policy was. So the market had to figure out what the Fed's monetary policy was, and the Fed mainly does that by buying and selling, treasuries and repurchase agreements and things like that. So they don't actually set the rate by proclaiming a rate. They set a rate by what's called their open market operations. So everybody would be like, oh my gosh, we just have to figure out what the Fed's doing, and they wouldn't announce what they're doing, and it would just change. And then he started with Alan Greenspan starting to talk about what they were doing, and then there was this crazy thing where they would look at how big his briefcase was, like it would expand out. And they saw a correlation between like how much he had in his briefcase on whether they were going to be tighter or looser in terms of monetary policy. Then they started announcing it. And then with Bernanke, they actually started doing press conferences. And then with Bernanke, he started giving some forward guidance. And then, they had Yellen. Now you have Jerome Powell taking it even further. They're actually giving their thoughts on what the economy is going to be. We have now what's called the Fed dot plot, where the 18 members of the Federal Reserve Board give their predictions for various things like unemployment and interest rates and inflation, and they give it out for the next few years, every single meeting. And this is now published. And you can see what every member of the Fed, with all their research of each of their banks and research staffs, is saying what they think inflation is going to be. And this is like a new phenomenon, relatively speaking. It's been, it's just continuing to progress. But they have given that they have a target of between 2.5% inflation, and we've been running below 2% inflation up until recently, and they had a hard time getting up to that over 2% inflation. They didn't want it to go above 3. Probably around 2.5 was where they said they thought the sweet spot was, which comes back to having some inflation is typically what you need for a healthy economy.
Man, like it's interesting. I've been reading more and more about this. So everything you're saying is like very much opposed to what I've been observing. And I think, like, for example, when you say we've been not able to meet inflation, first of all, I'm of the school that inflation is an incredibly difficult thing to measure, because it's like asking what's the temperature, right? Yeah. You can ask what's the temperature in this room, mm-hmm. or in St. Louis or in the nation, but like the further out you go where you're trying to describe all things, it's like less
Absolutely.
valuable. So, but I think that
inflation isn't a single number. It's not a single good. It's not a single service.
Right.
There's all these host of things. They're all moving in different prices at different times.
But I think like the Fed has played all sorts of games with the inflation rate, such as what they include on the consumer price index. So Is healthcare included in on it? Is housing? What happens when you start getting Netflix in? Now people aren't renting from Blockbuster, or they aren't buying DVDs. So how do you make these trade-offs? Yeah. And to me, they can make that number and have made that number whatever they want it to be.
Well, I think I love this. It's like a little debate we're getting into. It's fantastic. So first of all, the CPI is not something the Fed pays a whole lot of attention to. It's not their preferred measure. So they like something called PCE, personal consumption expenditures. So it's similar to CPI, but it's calculated differently. Then they look at a whole host of other inflation measures. They'll even look at things, there's like this million goods project. I think MIT or somebody does it, where they keep track of like 1 million goods that are out in the globe. I mean, they have economists that are looking at that. So, and it's interesting. One of our fixed income managers that we use had this individual that was one of their head people. So basically they're a bond trading shop, and he used to be at the Federal Reserve. I forget which bank. It was New York or San Francisco, or he was somewhere. But he came in town to visit us, and I went out for drinks with him, and I was like, what was it like at the Federal Reserve? And we talked about inflation. He goes, I want you to know that everybody at the Federal Reserve, like if we were all to wear the same set of pajamas, I thought this was fantastic, especially coming from like a bond trader. If we were all wearing the same set of pajamas, they would say, keep inflation low. He's like, every morning, everybody in the Fed wakes up and they're like, we need to control inflation. And obviously there's a dual mandate, you want, full employment too, but it's really the number one is limit inflation. And if you think about why would the Fed want higher inflation? Is there anybody at the government doing cartwheels over an 8 or 9% inflation print? I've heard some say, well, we have all this debt and they want to inflate away the debt, right? And if you look from, post World War II, we had all this debt after World War II. And, I think the peak of our debt back then was 1949. So between 1949 and sometime in the 2010s, last I looked at it, if you look at the reduction of debt versus GDP, inflation accounted for something like half of the reduction. And you could look at it and you go, oh my gosh, they just want to inflate away the debt. But there's a few things that are hugely different now. So first of all, back in the 40s, 50s, even 60s, the average maturity of a treasury bond was over 10 years. People bought 10 and 20 and 30-year bonds all the time. The average maturity of a treasury bond, and I don't know what it is right now, but it has come way down, is just a few years. So the idea that, you want to have this high inflation and you're paying just this low interest rate doesn't really compute, because in a few years, they're going to have to issue most of the treasury debt again, and they'll have to do it at higher rates. A second thing is
I'm not sure I understand that. So you're saying during the World War II era, when they were trying to raise money, they would put bonds out and they would say, hey, we want to fund this war. So if you will give us your liquid dollars, you have $100, you can buy a war bond and we will pay you back X amount of dollars. And so therefore, let's say we'll pay you 25%. That's just so it's easy math. So if you give us $100,
we'll pay you, at the time, let's say we'll pay you a coupon of 5% a year.
5% a year.
Yeah. So we're going to pay you 5% a year. And then what happens is if there's inflation, and you think about it, the government collects taxes, if you have an inflating economy, assets are going up, prices are going up, incomes are going up. So the government's going to be able to take in more taxes. And really, if you think about it, it's even more basic. Not even looking at the government. Just look at if you buy a bond now. If you buy a 3% muni bond right now, so it's tax-free, which is nice. Your point is if inflation is running at 9%, you're losing 6% a year. Inflation is devastating to bonds. And the flip side is true. If there's deflation, it's great to be a bond owner, because your 3% that you're getting is worth more and more every year. Whereas if you're only getting 3%, it's worth less and less every year. So basically, inflation is bad for bondholders, but great for bond issuers, right? So if there's high inflation and the government has all this debt at 2, 3, 4, 5%, and inflation's running higher than that, then it's and really it's like looking at
They
debt.
get to pay you back with dollars that are worth less,
They get to pay back with dollars,
and that were easier for them to get because
Absolutely.
they didn't have to raise it. All they had to
Absolutely.
do was print it.
Absolutely. So inflating away debt would be one reason why the government would like high debt, but it's so different because again we have the average maturity of a treasury is like 3 years or something. It's not the 10, 20 years that it used to be. So number one, they're turning around issuing bonds and having to pay a higher interest rate currently than they have been. So that's number one. Number two is since World War II, we've had this expansion. Social securities continue to expand, and then we have Medicare and Medicaid. So really, the biggest problem we have long-term financial as a company is all our so-called entitlements, and they're all explicitly or implicitly linked to cost of living or inflation. Healthcare costs, as they go up, the government has to pay more. Social Security has its COLA, its cost of living adjustment. So our biggest future liability moves with inflation, and we have much shorter term bonds. So the idea that the government wants inflation so it can inflate away our debt and screw the bondholders, everybody around the world, but especially in the U.S. that owns treasury bills, just doesn't make any sense at all. It just doesn't.
It makes sense if you think about one of the major differences is from World War II to the now is that we're no longer on a gold standard. So they have an infinite amount that they can print. They don't actually have to have some amount of value, something there, right?
Yeah.
They once are off that. So now that you have the ability to print money, if those prices go up, then you can just print more money. And eventually you get into a cycle, which I would propose we're in now, where the only way that you can keep your system going is if you continue to print money.
Yeah. So I think with an expanding economy, you have to print more money. And we don't need to get into modern monetary policy and Stephanie Kelton and all and all that, whether there's any validity to what she's saying. In fact, I'm going to a conference in November where she's a speaker. Can't wait to hear what she has to say. But yeah, I think why we're experiencing inflation goes way beyond, we've just printed too much money. And you got to look at the flip side too. So, money supply goes up, but then you have to look at the velocity of money. So it's not like how many dollars you have outstanding. It's how quickly they go through the system, right? And it's fascinating. A lot of times when people are most concerned about the amount of money that has been printed, which is roughly it's the proxy for that is sort of the size of the Fed's balance sheet, is on the other side of the equation is the velocity. And velocity, especially during financial crisis when we've hit COVID and everything, the velocity of money has fallen off a cliff. Like the reason we've needed to print money is so we don't go into deflation, because that's what happens when you have the reduction of the velocity of money. So
when you're saying the velocity of money, my understanding of this is the government makes the money available to banks to lend out. So when we're talking about these treasuries, right, it has to start somewhere.
Right.
Banks get it, and then they have to put that money out to work because they're either paying the Fed for the ability to use that money. So, for a long time we'll just say 1%, right? You get $1 million, you have to pay 1% back by next year on that $1 million. So they want to get it out, and they loan that money out to people who then say, all right, I'm going to take this $1 million to build, a factory. Yeah. And then they put those deposits because they don't need that $1 million right away. So they then take that $1 million and they use 100,000 of it, and they put 900,000 back in the bank in a form of deposits. Now then those deposits.
So there's this money multiplier.
Multiplier. And the speed that you're talking about, the velocity, is how quickly does that money get loaned out to the extent that the fractional reserve is all the way extended. You've expanded that by 8 times.
I'd even broaden it more and think in terms of the entire economy. So, and it has as much as anything to do with saving and investing versus spending. So if you think about it, you could see this during the lockdown and COVID, where the U.S. the individual savings rate skyrocketed, right? So if you look at charts, it's the savings rate is kind of cruising along in low double digits, and then it spikes over 10%, and it stayed there for a while, and it's come back some as consumers have spent more. But if you think about it, so if you make money in your job and you're like, okay, I can only do a few things with it. I can spend it, save it, invest it. That's basically it. I mean, if you save it or you invest it, you're not buying anything, right? Whereas if I go out and I say, I'm going to go to a restaurant, and then that restaurant owner makes money, and also they pay their people, then they have money to go out and spend again, right? So if you're spending less, then that's reducing the velocity of money. The savings, right? So the bank has more money they can lend out, but if the economy is slowing, then there's not a demand for people to go take loans. So we had these periods of time, even before COVID, where I talked to bankers, and they just said, we don't need any more deposits. Because,
now they do.
Yeah, they do now. But they were like, we don't even need more deposits because we have all the deposits we need, which is why they partly, they're paying zero interest, right? Because we don't have enough people wanting to get loans from us. And if you invest it, then that's a very long cycle. So a company has to say, okay, you've invested money with me, and I'm going to take that and I'm going to do capital projects or do mergers or, create new products. I'm going to do something that is in turn going to create economic growth. So, you look at the velocity of money, and it's all these factors. So there's no just one factor, and it's not even just, just the banks loaning.
I think that when I hear, I understand that, when you look at it really up close, you say, hey, we want that money to move quickly because if I'm spending that money at a restaurant, then that guy pays waitresses and cooks and servers and busboys, and they all then get to go out to eat or buy groceries. Mm-hmm. But the longer view is, don't I want to live in a place where I can earn something and then I can store its value, and that I am not pressured to put it back into the system because I want to be able to hand it down? Because now the only way for someone to preserve the wealth that they have earned, let's say they either just get paid an hourly rate and they preserve some, or they've built a business and they've sold something. Now the only way to preserve that wealth is to make it work for you. Yeah. Whereas if you had a system where you could store value that was not being inflated, an individual would have the ability to do something where they didn't have to put things at risk in the way that you do now.
Yeah. Well, it's really hard to not put things at risk and earn more than inflation. It's just, even when inflation's low, it's just really hard. I mean, basically, if you think about it, if you start with cash and you say, I want to do more than just cash, which, if you're lucky, is earning what inflation is. Hasn't been that way for a long time. There's only really three things you can do. You can take on credit risk. You can take on illiquidity risk. So you can, tie your money up in some way, shape, or form.
What is that illiquidity risk?
So the super simple example is like, okay, I'm going to buy a CD. So if I buy a 1 year, 2 year CD, and if I cash it out earlier, I pay a penalty. Or, you buy something that, with cash, it's immediately available. If you do a money market mutual fund, it's available after a day. So there's a little bit of illiquidity there. You could buy commercial paper, which usually rolls over every 7 days. So you get a little bit more, right? So then you can take yield curve risk. So basically you move out the yield curve. So you start buying fixed income securities of the like that have maturities, a week, a month, a year, 10 years, 20 years. And so then now what you own, the value fluctuates with what interest rates are. So those are the ways that you increase your yields, or you go further and you say, I'm going to buy public stocks, or you go further, I'm going to buy, invest in private businesses, which have even more illiquidity. So I'm an owner, one of the owners of my company, and, it's extremely illiquid. I mean, it pays a dividend, which is great, but
you can't go out and sell it.
I can't go out and sell it. I absolutely can't go out and sell it. Maybe another shareholder would like to buy my shares. Maybe my company would, but it's illiquid. So those are the things you do to make more money. And I think the idea of you can put money in the savings account, you're going to beat inflation. That's a difficult proposition. Even when inflation's running at 2%. I mean, you're not going to see savings accounts that are paying you 4 or 5% when inflation's running 2% on average. So, but I mean, coming back to the whole government thing, I mean, the Fed wants low inflation. I mean, that's one of its mandates. It's why it exists, is to have a little, because deflation's worse than inflation. We think inflation's bad. Deflation's much worse.
So give me that one again. I think I've asked you about this, but I've had so many people try and explain this to me, and for some reason I'm incapable of understanding.
Yeah. So a little bit, think about what goes on with flat screen TVs. So it used to be, I remember back in the day, you could buy like this. I remember I bought this like 25-inch TV, which was huge at the time. Like, right. It was like this huge TV, and it weighed like, it was this big box, and it weighed like 70 pounds and whatever. And it was like $1,200, and I was just, we have in our guest room, I just mounted on our wall the other day, this old flat screen TV we have. It's like 8 years old. And I was looking at the menu, and it has like, it's a smart TV. It has like Netflix and a few ththings, but it doesn't have our app for our streaming service. And I almost didn't mount it. I almost just said, I'm going to, it's like a, 35-inch TV. I almost just ran to Best Buy and bought a new one because they're so cheap, right? So flat screen TVs, for what you get cheaper every single year. And so if you think about it, if you're sitting here, you'd say, okay, I'm in the market for a TV. I think the TV I have is fine, but I'd kind of like a new one. Maybe I have a 1080p and I want to move to a 4K or a OLED or whatever the new technology is. You are incentivized to wait to buy it because next year you can buy the same TV for less, or you can buy a better one for the same price that you would buy one now. And it's the same with technology in a lot of areas where you can buy. I know that next year I can buy a faster computer for the same price I can buy one today. That in general, the price of a lot of technology tends to go down. But imagine if everything was like that. Imagine you went into the grocery store and you're like, we need, or Target, let's say, we need toilet paper for our house. And this big, package is $10. But if I wait a month, it's going to be $9. And you're like, well, we have a few rolls at our house. We're just going to wait. Same thing if you knew cars next year was going to be cheaper. If you knew, you needed some sort of service, like you're like, I need a lawyer to do my will. And if I go now, it's going to be $2,000 and I know it's going to be $1,500 in 2 years. Everybody waits. And it ends into this deflationary spiral where there's less and less demand, which causes people to make their goods cheaper. Because when you make the goods cheaper, then that increases demand, which further causes people to wait to buy, which creates more low prices, which creates more waiting. And it's what we saw in the Great Depression. It was just devastating.
To me, what you're describing sounds great. I actually think like that actually would be a cultural change that we say we want, but that our monetary policy discourages, right? We say we want kids to save, but when we're inflating the money, we say, well, it's actually, we have to, maybe it is a good idea to spend that money today because it's cheaper today, and you don't want to wait. But then what you also do is you take away humans' propensity to save and preserve and really look at what is it that I want to buy, what is it that I need to buy, because when I go to buy a good, I am expecting that good is worth the money that I have because it's not being inflated away, and that the goods then become something that lasts far longer. So look at the time horizon that people had on goods that were 30, 40, 50 years ago versus the time horizon that they have now. Now we have a disposable economy, right? The TV didn't have the app that you wanted, so I want to get rid of it and get the new one. Whereas if you were spending more valuable money on it, the producer of the TV would be incentivized to think about, how can I create a TV that has lasting value so that it is more competitive, as opposed to strictly competing on the lowest possible price?
Yeah, well, I think a lot of manufacturers, they compete on, if you think about it, if you go out and buy a car, or you buy a TV, or you buy a computer, and you're not always just buying the cheapest one. You're looking at different features and quality, and you're looking at what you want. But on any individual good, so you say, okay, it's great that I could buy a better TV for less money next year. But in deflation, where you have most goods and services declining in value year over year, we would go into a depression like we had in the Great Depression. I mean, one of the big, it's kind of symbiotic. You can't say one totally causes the other or vice versa, but the collapse in prices that we had during the Great Depression is part of what created little or no economic growth. We had, the economy contracted by over 25% during the time period. And part of the reason was the reduction in prices. And companies, they won't invest in new goods and services and capital because anything that they invest now and they say, okay, we're going to build this plant that's going to create our widget for $10. But in 2 years, we're going to sell it for $8 and then $7. It strips away the incentive to invest. The economy wouldn't grow. The stock market wouldn't do well. I mean, countries that have experienced deflation, it's been devastating. Japan's had deflation off and on for the last 20 years.
So I've heard this, and I've tried to look it up. This is a complicated thing. So I will be the first to tell you that the Great Depression is something that I have like a caricature style understanding of it, right? Like Grapes of Wrath is about all I have, right? But with Japan, they actually have been printing and printing and printing money. I mean, they really are the OG modern monetary theory, and they're the ones that said, hey, the way that we get out of this, the economic problems is just print money.
And it hasn't worked. And they haven't had traditionally the high inflation, and they've had slight deflation to very low inflation as they've continued to print and print, which shows you that it's not just monetary policy that creates inflation.
But I think their prices have increased dramatically, right? Like if you go look at food prices, right? How much it costs to buy the yen 5 years ago versus today just keeps going up, right? And they were one of the original creators of the digital signboard because they had to change prices so quickly.
Yeah.
So I hear people say that Japan is in a deflationary death cycle, but I guess I don't believe.
No, I'm not saying they are now. They've had deflation. They kind of hit. They had their super high growth, and Japan was taking over the world. We had we had Japanese investors buy Pebble Beach and all these marquee properties in the U.S. And it's kind of like you think back to Die Hard, the movie with Bruce Willis. That was so great. But you had remember that the building was at the Nakamichi Corporation.
Oh yeah, that's
remember? Right. And they, you had those South African terrorists with stealing their $640 million of South African or the German bearer bonds or whatever. And of course, any corporation with at the time $600 million just cash laying around, of course it would be Japanese because the movie was from 1988. Japan was taking over the world, so they kind of hit they were having quite a bit of inflation. Their economy was growing by gangbusters. The Japanese central bank stepped in. They raised interest rates. It tanked the economy, and the Nikkei 225 average still hasn't hit its 1989 peak. It's still below its 1989 peak. And during those time periods, they had periods that there was deflation. It's not that every year since then we've had deflation in Japan. I actually don't know what the current inflation versus deflation is in Japan. I'm a little bit over my skis talking about exactly what's going on in Japan recently in terms of inflation. I guess the main point I'd like to make is I think that there's this kind of siren song of, okay, we went off the gold standard, Nixon took us off the gold standard in the early 70s, and we had a modified gold standard with Bretton Woods, post World War II, and that it's been this slippery slope that's eating away America's value. And if you had a dollar, back in the 1940s, it's worth cents today as compared to that. And that's it's like, okay, the government's not doing a good job, and they're doing this intentionally, or there's these Freemasons I've heard of, this world order that is behind inflation. And if only we go back to the gold standard, or maybe crypto can be our new way to rid ourselves of all this money printing by all these governments across the world. And I'm sure there's some validity to that view, but I think it's way overstating things, because what's sort of ignored is, okay, if you took that same dollar back, let's say it's 1949 again, and you invested in the S&P 500, you crushed inflation. Like, you have so much more money. Even just look at the price of your house. Look at the standard of living. I mean, that's one of the issues people have with CPI, but saying, oh, well, things tend to go up. But part of what CPI does is it takes into account improvements of goods. I mean, look at that TV versus what I bought, 30 years ago. Look at even, the iPhone 14 that's about to come out versus the first iPhone. Even if the iPhone 14 it costs more. Look at the processing power and everything on it. So,
but let's go to the electronics is an unusual one, right? Because you're talking about the speed of transistors gets much faster, processing power. But if we take the house, for example, right? Yeah. The price of those houses has certainly gone up, right? Yeah. Because there's more dollars chasing after, a good, right? So now if you want to buy the same house, you have to have an accumulation.
And there's an inherent scarcity, especially in urban areas.
And so the inflation, I think the housing market is actually a really good example of constant inflation, right? We anticipate that houses will keep just going up and up and up and up, because as more money gets pushed into the system, and this is a great way for it to have high velocity, right? Because as soon as you buy that house, you're putting that money into a bank. You're getting that loan out from a bank. Then that money is not actually in your hands, and it's just getting loaned out.
No, actually, it's stuck in your house. So you haven't put a deposit in the bank that gets loaned out. You've taken a loan. Now it's stuck in a house. But over, again, since post World War II, housing overall, again, there's different areas of the country where it's different. I mean, if you have a, coastal property, in Nantucket, it's different than, being in a suburb in St. Louis, obviously, in terms of how fast houses have gone up. But housing goes up typically just slightly more than inflation. So when our clients ask us, oh, well, is a house a good investment? We're like, no, your house is where you live, and it actually costs you money because there's maintenance and upkeep and decorating and furniture and all the stuff that you're going to buy. And if you buy a bigger house versus a smaller house. So housing goes up slightly more than inflation over time. And as we saw in 08, 09, housing prices dropped dramatically. And I think we're probably seeing that housing, the increases have cooled, and we're starting to see, especially, I just went jet skiing this past weekend with a friend of mine who's a realtor, runs a real estate company. And they're starting to see, instead of houses going over asking price, we're starting to see normal again, where, they're going for less than asking price. And instead of all these, I think we're seeing a moderation, and we may see it, return back down. And, but yeah, definitely houses have gone up over time. So that's an example of, that's an asset that people own, and it has beat inflation over time. Some periods handily, some periods not. But you can't just look and say, well, the dollar has been inflated away, because then all the assets that people have in general gone up more than inflation. The stock market's gone up over more than inflation. A diversified bond portfolio over time has gone up more than inflation.
Are you still enjoying this? Because I could do this.
I could do inflation all day.
So let's keep going. So
we don't even need to publish this.
The stock market is one that is, to me, the inflation rate of is really evident in the stock market, right? Because all of these, particularly now, right? The corporations, if you have money, and just like we said, it's going to cost you money to keep it in a savings account. So therefore, you want to put it somewhere. Yeah. And then you have two options. I can either actively trade it, or I can passively trade it, right? And then the passive trading could go in either I'm buying mutual funds, or I'm buying an index fund, and that we've already talked about that in past podcasts. But to me, the inflation shows up in the stock market, right? It's very difficult to say what is the stock market worth relative to 1940, because there's been so much inflation, and all of that money has dumped into the stock market.
Over long periods of time, the stock market has outperformed inflation. Typically what happens is when you get a jump in inflation, and we're seeing this right now, it's negative to stocks. but over longer periods of time, companies can pass through the higher prices and restore their profitability. And in fact, stocks are one of the best, actually over, if you look out 5+ years, the best inflation hedge. It's proven over time better than gold, it's better than commodities, better than real estate. It is more consistent as an inflation hedge than any of those things. Now, some of those may do better short term when there's jump inflation. Partly it depends on what causes inflation. So like energy has been a hugely inflationary lately. So if you own energy, it's done great, whereas other commodities might not have done so well. Another thing that speaking of energy, so again, inflation is so complex, and I don't completely understand inflation, nor do most economists. And I think there's a lot of people that have definite views on inflation and a lot of criticisms of, CPI or the Fed or this or that are still, like, you think of the Dunning-Kruger effect. You have this idea that when very little about something,
you
vastly overestimate it. And as you learn more, you realize that you don't really know that much. So here's a perfect example. So a lot of people I talk to, they're like, why would core CPI exclude food and energy? That is ridiculous. It's the dumbest thing. Like when the price of gas hits $5 and my gallon of milk hits, I don't drink milk, so I shouldn't use that example, but hits whatever it is.
You don't drink milk? You
No.
just offended about half the people listening to this.
Yeah. Here's another thing. I'm a vegan. Have been for 20 years. So I probably shouldn't say it. I drink almond milk, but no. So the price of my food, my steak or whatever's up, that hits me hardest. Like why wouldn't that be in the core consumer price index? And why does the Fed often focus on, the core PCE that takes those things out? And the reason is high energy prices and high food prices are actually disinflationary to other goods and services, which makes complete sense if you stop and think about it. If you're commuting into your work and it usually costs you $50 a week to fill up and now it's $100 a week, that means you're going to be spending that extra $50 you spent on gas less on something else. If your grocery store run is now $150 instead of $100, like all these things cause you to spend less on other things, which the high prices there reduces demand for other goods and services. So that's why there's the smoothing effect if you take out food and energy, because first of all, it's more volatile and creates spikes, which is one reason. The second reason is high energy and high food prices, because they're necessities, is actually disinflationary. And the first time you hear that, it's like, poof, mind blown, right? But yet there's all sorts of people that have these strong views on inflation and CPI and all this chain versus not chain that don't understand, money supply versus monetary policy. That don't understand this and that. And again, I'm not an economist. I can't say that I have it all figured out, because I absolutely don't. But I've read enough on it that I don't feel like I'm any longer on Mount Stupid of inflation. And I'm like, oh, wow, there's a lot of factors. And just step back and look at the Fed, that in September of 2021, all 18 members of the Fed said in 2022, the highest they thought the Fed funds rate would be is 50 basis points throughout the entire year. They control the Fed.
So for people that don't know, that's a half a percentage point.
Half percent. And, it's running, it's 1.75, I think now. There, Jerome Powell speaking and Jackson Hole just said there's going to be at least another 75 basis point, 0.75% increase when, later this month. So, the idea that it was only going to be 50 basis points, 0.5%, in retrospect is laughable, but they really thought that. And the market showed it.
I mean, and so I would say I'm off Mount Dunning-Kruger in just my experience over the years. So I got to live in a pre-industrialized country. I worked at the World Bank, the definite high priests of inflation is a good thing. I'm involved in a community bank. Like, I think I understand the monetary system relatively well. And the examples that you're giving about, like, taking gas out, for example, or groceries, if they go up, like, we should take these out for CPI. When CPI is presented as a way to understand how much are things really getting more expensive or not, if you take those things out, maybe that's true that you can reduce spending in other places if you're above the 50% median income, right? But if you're below it, there is no other place to go, right? If your gas prices go up, and what that means is either your savings rate goes down or other goods that you needed, you are now out of reach, but not really because of the way our credit system is set up, right? So you can just extend that out further. So to me, the argument of we need to take these things out so that way the number is smoother, so we can better understand it seems like
well, regular CPI does include those things. So there's, as you're aware, there's all these different versions of, CPI, urban areas, all consumers, with and without food and energy. So nobody's looking at it in just one way, but the core CPI that doesn't include food and energy just gives a different flavor than ones that include all of it.
So you mentioned crypto earlier. Do you think, do you make a distinction between crypto and Bitcoin?
Yes.
Tell me more.
Well, there's more than, there's other crypto out there than just Bitcoin.
Yeah, I often find that people that use those words interchangeably don't actually understand the distinction. Like, to me, the core thing that made Bitcoin truly beautiful is that it never had this ICO. It never had these like initial coin offerings where you say, hey, everybody come buy, magic coin and let's go do this thing. Instead, it had the immaculate conception, right? Somebody put it out there on message boards. Anybody could buy it. And for many years, if you knew what it was, you could even take a laptop and use its excess power
to mine them. Yeah, it was great.
And so that distributed them all the way out to, I think, 19 million have been distributed. There's only 2 million left to be distributed. And no other coin is going to be able to replicate this. I think it was like a once in humanity experience, and that no other coin, no matter what their other attributes are, none will be able to be distributed in that way, which makes it like almost something supernatural.
Yeah. Yeah. Bitcoin is absolutely special. And I'll tell you, at our firm, we get asked a lot about Bitcoin and other crypto and NFTs and everything. And I am not our firm's expert on this. I will tell you, I've read 2 entire books on blockchain, which is, for people listening, it's the underlying, technology or system behind cryptocurrencies. But there's a lot of other applications for blockchain other than just crypto and cryptocurrencies. I've read a book specifically on crypto. I have read white papers. I've listened to podcasts from experts. I've been to investment conferences where people have spoken on it. And I will say that on a scale of 1 to 10, with 10 being an expert and 1 knowing nothing, I'm maybe at a 3.5.
So you're a guy that learns, vociferously. If you were going to try and take that from a 3 to I don't know what the numbers mean, right? You could normalize them for us to say a 5 means I'm now comfortable, doing something. Like, how would you move from a 3 to a 5, and what would a 5 equal?
Yeah, I think I would have to do a lot of more reading and studying and dig in. And I guess really what I would need personally is more of a passion than I currently have to know more about crypto. I'd have to say, wow, I really think this is something that I really want to become an expert in. And I think I would, in addition to even reading more than I have and doing more studying, I think I would have to really, start interacting and learning from someone or some people that are true experts. I mean, I own some Bitcoin and some Ethereum and some Solana. I mean, I track it. I buy it. I don't say I trade it. I just periodically buy it.
You're a hodler.
What's that?
The hodler. That's you buy and only hold. You don't. Yeah. You're not buying it to sell it.
Yeah, I'm not buying it to sell it. And I'm fascinated by it. And we have clients like all the time that, especially our younger ones, saying, should I buy Bitcoin or some other cryptocurrencies? And really, my first question back is, why? Why do you want to buy it? And it kind of ranges. Part of it is, I think this is the future, and we're going to be transacting in, various forms of crypto in the future, and it's going to replace fiat currencies. Others are like, well, because, I think right now they'll say, oh, I think it's low and it's going to go back up to maybe closer to where it was before or beyond. So there's all sorts of different reasons. So I think that's the number one thing. And then the second thing I usually say is, sure, okay, let's buy some crypto. And how should we do this? Should we just open a wallet? We haven't done, you and I have discussed cold storage a bit. We haven't, as far as I know, have anybody using cold storage, but we have had people use some different sort of custodians. I know there's some ETFs now. We've actually had some clients that have done some, we've looked at and helped them do some funds, So that's been sort of interesting. But as of right now, like, we're not like all in saying, oh, everybody should have an allocation to crypto, or B, that it should be a big amount. If anything, we've kind of cautioned against doing a big amount. And, I think it's just a characteristic of an early industry. I mean, you can look at, automobiles or computers or internets or airplanes or televisions or so many different things. And early in an industry, there's a lot of creative destruction, And you look at the early automobile industry, and from 1900 to 1920 in the U.S. alone, 775 automobile manufacturers went into business, 600 went out of business, and there are 7 brands that were created before 1920 in the U.S. that are still around. And some of them are, things like under GM, you have like Buick and Chevrolet, both owned under the same conglomerate. And, you look at the internet, like Google was the 21st search engine. So there were 20 before Google. So it's often difficult in a young industry to say, even if it is going to be, even bigger than it is now, even if it is going to, replace, fiat currency, or maybe it's like, you have Visa, MasterCard, American Express, Discover. Maybe you'll be going places deciding whether you're going to pay with crypto X, Y, Z, whatever. So who knows what it's going to look like. It's just tough to pick a winner. So, early pioneers in any new industry or technology, 10 years later, typically have, studies have shown less than 10% of the market share. So it's usually the fast followers that come on. Will that happen with Bitcoin and even Ethereum, where they'll be displaced by somebody else in the next 10 or 20 years? Or will they still be, kind of the two marquee ones? Just nobody knows. Just nobody knows.
The question about learning, one of the things, people know that there are miners for Bitcoin, right? But I think the thing that I learned the most on was I set up a full node. Are you familiar with what a full node is?
I am not.
So a full node is what actually reads out every single transaction that happens. So right now, if you don't have a full node and you want to know what is on that blockchain, you go to the internet and you have to go to someone and say, what do you think the blockchain said at this particular block? There's been 750,000 blocks. I want to know what was in this block right here. Now, somebody listening might say, why in the world would I want to know that? But we'll just for sake, if you wanted to know it, you have to ask somebody else. But if you want to know it yourself, you can set up what's called a full node. And so a full node is just the entire readout of all of the blockchain, every single block that's ever been there, and you access it on your own computer. So one way to do it is to set up a Raspberry Pi, and then to buy a storage device.
Oh, you can do that in a Raspberry Pi. Okay.
Yeah, it's very simple because it's not computing. You're not doing the hash. So a miner is trying to get Bitcoin, right? Yeah. You're running through this hash and you're keeping the entire blockchain. And if you happen to guess the right number, then you get to pull, you and your slush group get to say, we're going to divide these Bitcoin out among ourselves. With a node, this is likely the thing that will be in everyone's home as an appliance, right? It will be like, hey, I want to have a node, not because I want to go look up the transactions, but now if I want to trade a Bitcoin, the way that you do it is most people, they'd say, I have to go to Coinbase and say, Coinbase, will you take my Bitcoin, which here's my public key and my private key, send it from here to there, which is custodial, meaning not your keys, not your Bitcoin. So you also would have to go to somebody else for permission to move that Bitcoin. But if you have a full node at your house, now you can go and say, hey, node, I am moving Bitcoin from this private key to that public key, and I want you to put that into the ledger. And then once that's spread out among all the other nodes, that transaction has occurred.
It has occurred.
So that's actually
Fascinating.
technically how that happens. And the reason that I say I learned so much was you go to get this Raspberry Pi, it costs you about $100. You go to get an SD card, costs you about $100. You have to do just a little bit of work to get it set up. Maybe an evening's of work. You plug it in and you think, okay, download the blockchain. What's that going to take? An hour, 2 hours? No. This computer is down fully. It is not doing anything else. 100% of its compute power, throttle all the way down with the fastest internet. I have, fiber at my house. It took 5.5 days to download all of the transactions.
Wow.
So for the first time, do you ever get a real sense for how big is this blockchain and why does this matter? Because every single node that's out there that says this is the way we view Bitcoin has that exact same ledger, that exact same set of all those blocks. And I think that once I
would learn so much if I did that. Maybe
I
I'll
think
do
that
that
would take you from a 3 to a 5.
Yeah, that I would learn so much because it's really doing, and that's not quite doing, you're observing, but that is a whole different layer in terms of understanding.
Well, and a lot of the stuff that I knew about it was like reading and, you're kind of using these internets, like a Coinbase, for example. But when you have that node, all of a sudden you're like, wait a second, like I now see the utility of like how this would work. And you think about, there were these people accused of doing things wrong with that tornado, stuff. Like now that's because they're using a custodian to be able to move Bitcoin. And the core philosophy around Bitcoin is you have it and you can send it and there's no intermediary.
Yeah, you don't have to rely on an intermediary. Yeah,
and
that's
the
beauty
node
of
makes it so there's no intermediary. And that's when the lights start to click.
So it's like almost like in the Matrix when like Neo and the others, they'd see all the binary code and it meant something to them, right? They could read binary code. Wow.
Yeah, and once you have a node and it's running, then you can flip open your computer and say, hey, I want to make sure my node is fully synchronized and I can look at it. And then over top of it, that's when you start seeing, it's unlikely, in my opinion, that Bitcoin will be the thing that you use day in and day out. In fact, that will be because we were talking about inflation, right? And I'm saying, hey, I see real value in there just being
21 million
of it. So you can store it in that Bitcoin. 1 Bitcoin equals 1 Bitcoin.
Yeah.
But now if you want that layer that's much faster transaction, because right now if I send you a Bitcoin, it takes maybe 10 minutes for the first confirmation, but we don't know that it's real until we've seen 3, 5, 6, 10 confirmations. So it could be an hour for that transaction to occur. So that's a much slower system. But they have layer 2, things like the Lightning Network, which would say, I'm going to put money into this Lightning wallet, and you're going to have money in your wallet, and we can send things much faster. It happens in the blink of an eye.
Yeah.
That like when you have a node, now all of a sudden you can do these other things that you hear people talking about, but you can't understand it until you've experienced it.
Yeah, fascinating. Yeah, it's an area that is just fascinating, and we could, I'm reading a book on the metaverse now, and I've been reading all these papers on Web3, and it's just, it's tough as humans to look forward and imagine the future much different than the present. But man, if you think back, just how, even just 10 years ago, how wildly different things were then versus now, and the progress in a bunch of different areas technologically, it's just stunning.
Are you an optimist? Do you think things will always get better?
No, okay. So I'm in general an optimist, but like for instance, I write this blog, and I have a blog that I've written, and I'm trying to decide whether I'm going to publish, and it really is sort of sad because it starts with the story of my 23-year-old daughter asking me in the last year, Dad, did you ever, like, at some point in my childhood, there was a time when you picked me up for the last time.
Oh man. Oh God.
And did you realize that was going to be the last time? And thinking about it doesn't make you sad.
Oh God, that makes me really sad.
I know. And I was like, dang. I was like, no, I hadn't thought about it. I didn't realize it. And I wasn't sad until you just mentioned it. And I just thought, wow, I should have just like cherished each time I picked her up. Because like she's 23, I'm not going to pick her up anymore. I'm a pretty strong dude, but like you don't pick up your adult grown children, right? And there's like things like like that. Like my wife and I were having this conversation not too long ago, and she said, you right now, John, are the youngest you'll ever be. You'll never be as young as you are right now. I'm like, yeah, wow. And I saw an article, the headline from Scientific American a few days ago was, this was a pretty hot summer, yet it is likely one of the coolest summers you'll have for the rest of your life.
Because of climate change?
Yeah. And I was like, wow. Yeah. So, I mean, there's things like that, that I think, I'm aware of. I don't think things are always going to get better, but in general, yeah, I kind of think the arc of humanity is, with a lot of caveats is progress. I think now is the greatest time in all of humanity to be alive.
What makes you say that?
It's interesting. There's been entire books written on this. So Steven Pinker had one. I'm forgetting his title. There's Factfulness by Hans Rosling.
The Rational Optimist by Matt Ridley.
Yeah, I've not read that. But it's like, I know that, life expectancy in the U.S. has taken a hit the last few years. But other than that, like life expectancy gets longer. You just look at even people that are at the lower income levels in America, if you roll that back to what it was 100 or 500 years ago to be a lower, income person, just the wealth, the ability to travel, the information we all have access to through the internet, it's pretty stunning.
Then what do you think, how would you explain then mental illness in the United States?
Yeah. So, I think it's a huge issue. I'm sure we've always had issues with mental illness. I think COVID it was a big hit. I think the lockdowns, I think, and still this remote work thing has to be damaging mental health wise.
Interesting.
It just has to be, when remote work started, at our company, we were remote in March of 2020. And then you could come back voluntarily like later that summer, but only a handful of people did. We'd have 5 or 10 people.
I remember you grappling with this when
Yeah.
we talked about it.
Yeah. And there was a lot of great things about working from home. Like there was a lot of things I loved about it. I was like, this is so many things about it were fantastic, but then you started kind of missing people and kind of our culture and our environment working as a team. And then on summer solstice 2021, we told everybody we'd like you to be back most of the time. That's our rule. We're a big fan of like simple rules. Treat people like adults, come back most of the time. And most people do because we really enjoy working together. And I just think it's the social interaction. And I know people know of people that are early in their careers that their jobs are completely remote and they're in their bedroom or at their kitchen table all day just on Zoom, and it's just so isolating. We're social creatures. We need to have interactions with others, and I just think it was horribly damaging. I look at my parents who are in their late 70s, and COVID was horrible for them. I mean, they were kind of that age group where they really didn't want to get COVID. I mean, I don't think anybody wanted to get it, but they really didn't want to get it. And they didn't see their grandchildren much. They didn't see their friends. And, my parents were like, we all have expiration dates, but ours is getting closer. And, we're binge watching a lot of great TV, but, I think it was damaging for them mental health wise.
There's been a big push in kind of like the millennial media, right? Like the Joe Rogans of the world. Against things like SSRIs, those like mental enhancing drugs. What are your thoughts on?
Yeah. I get where they're coming from. You could look at the society and say that everybody, there's way too much over medication. It seems like, so many people have ADD or ADHD and they're taking their Adderall or Ritalin, and, does everybody have a mental illness, some sort of anxiety or depression? And sometimes it can, I think sometimes, there's a good argument that, maybe there's some overprescription of some of these drugs. I'll just tell you from my own personal experience, I take an SSRI, and when I don't.
What are they?
So selective serotonin reuptake inhibitors. So that's what it stands for. And like many things with the brain, they don't totally understand how they work. So it's interesting. I went to this conference on the brain that was at Stanford and joint Stanford and University of California, San Francisco about 5 or 6 years ago. And the guy that led it off that was from Stanford, he was like the head of like neuroscience research at like Stanford Medical School. He said, we're looking for, 4 big things when it comes to the brain. And the first of which is a theory of the brain, like a theory of how it works. I was like, as a layperson, I was like, really?
Yeah, that's how far we've had people on the podcast that have talked about that.
Yeah.
And you're like, I thought we were further along than this.
Yeah.
And they're like, no, theory of consciousness. We don't even know why we're aware of ourselves.
We don't, and are we really, right? And you talk to an anesthesiologist and they're like, have no idea how it works.
This happened to me yesterday. I was at the dentist and I'm talking with them when they're giving me the shot.
Yeah.
And I was like, what exactly is going on when you give me the shot? And she's like, I can give you like some concepts, but we don't actually know.
Yeah. So I have a friend that's an anesthesiologist. We have we had a lot of conversations about this. And he's like, yeah, if somebody could come up with a theory of consciousness, they'd win the Nobel Prize in, medicine and physiology.
Because we don't actually know, people don't realize this. Is it that you weren't feeling pain or is it that you don't remember feeling pain? And if you don't remember feeling pain, does it matter?
Does
and then
it matter?
you get into all these weird philosophical
You do,
questions.
totally. Yeah. So they don't know how SSRIs exactly work. Again, it has to do with, the serotonin, which is a chemical in the brain. And, supposedly different people based on these receptors are more or less sensitive to it. And that's about as far as I can go on exactly how they work. But like I take an SSRI. I've struggled with obsessive compulsive disorder, since I was a teenager. And, which is it's really like a form of anxiety. Like anxiety and OCD are flip sides of the same coin. So there's an anxiety component to it. And there are periods of time when I'm like, oh, I'm doing great. And I'll stop taking it for a while. and I'm like, dang. And usually it's my wife that points it out. She's like, have you not been taking your Lexapro? And I'm like, no. And she's like, why? Like you're going off the rails here. So,
And what happens when you go off the rails?
the OCD spikes. Yeah, the OCD spikes. And
what I know of OCD is I need to wash my hands.
That's a very common one. Yeah, so OCD is fascinating. So an obsession is a thought, right? So, but it's a thought that creates anxiety in you, and a compulsion is what you do about it, right? So, and typically it makes your world smaller, and it often is associated. You'll hear people say, "Oh, I'm so OCD," because they like to, keep their desk neat or, their closets clean or whatever. And I think, it's a continuum. There's not like, oh, you have OCD or you don't. Like it's not this either or sort of proposition. We're all in a continuum of things. But a classic example they use is like, let's say that, and usually the obsessive thought is completely irrational, and then the compulsion does nothing to solve it because the thought isn't irrational, right? So a classic example that is used by therapists a lot is, let's say you develop this issue that you don't want to travel across a bridge. Like it's, maybe there's maybe it's after, I-35 in Minneapolis collapsed, or, maybe it's after 1989 when the overpasses collapsed in San Francisco. So there's maybe some spark of rationality there. Maybe you read a story that sparked it about, crumbling infrastructure in America. But for whatever reason, you become extremely afraid of bridges. So at first, you may just be like, okay, I'm gonna only go across short bridges. Like I don't want to go across the Golden Gate Bridge or the Bay Bridge, but I may be okay going over a small bridge. But you get to the point where maybe you don't want to go across overpasses. So what you do is you start planning your route so you don't have to go over any overpasses. But then maybe you start not wanting to see bridges at all. So you'll plan your route so you don't want to see any bridges or overpasses. But then you realize that's really hard. So now you're not wanting to go most places. So now you only want to travel to places that you've been before that you won't see a bridge or an overpass, right? So, and then you don't want to watch TV because bridges are on TV. So maybe you'll only watch shows that you've always watched.
Wow.
So your world gets smaller and smaller and smaller. So the way they treat that is partly there's some SSRIs that have been approved for OCD and some other drugs that are beyond SSRIs, But what they'll start with is say, okay, so now you're kind of terrified of bridges and it makes no rational sense, but your brain can't stop it. And you know that it's irrational. Like, you know, it's bonkers. You're like, I know it's crazy. So they'll start with,
But I can't do anything to stop it.
right. So they'll start with, you're going to talk about bridges. You're going to look at some pictures of bridges. You're going to drive by bridges, et cetera. And there's people that are like, okay, I'm only going to go across a bridge if I'm wearing a helmet. Or there's other things that you'll do that's the compulsion as well that seem crazy. And like over, really one of my first obsessive behaviors is I was probably a sophomore in high school. And I got to where I'd only listen to Led Zeppelin. I mean, only Led Zeppelin. Like I would only listen, back it was cassette days and albums. I'd only listen to Led Zeppelin. I wouldn't listen to the radio. So when I got in the car with friends, I'd tell them before we got in the car, I'd always have a cassette tape with me. I'd say, we can play the Zeppelin cassette tape. Don't play anything else. I didn't like to go to places where they were like stores where they were playing like Muzak and things and other things. It concerned me to go out into the world because what if I heard something other than Led Zeppelin? I mean, it was completely bonkers. I mean, it was like,
and at first would be very hidden. It'd be like, oh, that's just a high school kid that loves this band, but then slowly becomes all consuming.
Yeah. And I've had other periods of time where,
when did you even become aware that?
Really it wasn't until my 30s I realized it was OCD. And it was really, and it would ebb and flow. I'd have periods of time. But I'd always have these things that, some of them can be sort of almost positive. I've had a lot of OCD around exercise and eating. Like I love restrictions on eating. I love it. Like the idea of fasting and vegan. And I mean, if it weren't for my wife and my therapist, I would be probably a raw foods, vegan, gluten-free faster.
This is fascinating. I didn't know that this was possible with OCD because it's always been presented to me as you want to wash your hands all the time. You can't see something out of order or something like that.
Yeah, I used to, I had this period of time where I would check the mailbox 20, 30 times a day. Like I knew there was no mail, but I couldn't stop myself from checking the mailbox.
And you would feel better? Like you would feel anxiety until that
I would
happened?
feel anxiety. I'd feel like almost a sense of doom and like I had to check. And I'd be at work and I'd feel like I needed to go check the mail. And then the way I got around it a bit is I'd have my kids go check the mail. Like they were young, No, it's just, it's completely Fruit Loops.
And so you're in your 30s, all the way up until this point, you've just adapted your life to these various quirks that you have?
Yeah, it can be bonkers. And both my kids have struggled with it. I've had other family members. But, therapy helps, but the medication helps keep it at bay. Like if I didn't take, I take Lexapro. If I didn't take Lexapro, I would be really struggling. But I only take a certain amount. Like if I take too much, like at higher doses, I have lesser OCD tendencies, but I feel that takes away part of who I am. So like there's a balance, of having the right amount.
What is it? What's the experience like of taking one? Is it feel good to be on the medication?
No, I mean, no, it can be a little dulling. At higher doses, you can feel a little bit of a dissociation almost, so no, but it's not like pleasurable, but I just feel more, kind of, I feel less anxiety and less OCD things. Yeah.
Yeah. I think that OCD or I don't know OCD, but your obsession is actually what makes you, special, right? Like that's what made you an expert on private jet ownership or on how this.
No, there's definitely
works
upsides to it. Like I had a therapist say once, if you're gonna pick something mentally to be, extraordinary at, OCD is a good one if you can channel it. So, but like exercise, like without medication and therapy, I would get to where if I would have to have a regimented, and when I was doing triathlons, like I would exercise, I'd train twice a day. And I had these exact plans. That's why I've run marathons. I love marathon training because there's this prescribed regimen of the marathon training. And if I didn't do one of the trainings for a marathon or a triathlon or biking or whatever, I would feel like I'd feel like my world was going to end. Like I'd feel a growing sense of panic. Like if I was going on a business trip or vacation, I would structure everything around still being able to make that workout from that plan work. And the idea that, okay, I'm traveling to San Francisco and I'm gonna have an early morning flight and I can't get my 10-mile run in, like it would cause me to feel like I was having a panic attack.
I mean, all the way up until the panic attack, that doesn't seem like a thing that I would want. But I think most of us wish we had, that voice in our head that is normally resistance being like, no, you need to get out there. You got to do this. Yeah. And if you could do it without guilt, that'd be a hell of
it's great
way to
because
live.
it causes, if your obsession is exercise, the good is you exercise a lot. The bad is you overtrain and you structure your life where that's the most important thing. And imagine if you're a family member to that person imagine, so you have 2 little kids and a wife, and imagine if, and this, because I had 2 little kids your age and a wife, and it was like the most important thing is I got the run or the bike ride or the swim in, and that everything else had to be scheduled around that. That was the most important thing. It wasn't because it was the most important thing. It was because I felt like doom, like panic.
And then then the whole time you're in that, even if you're not doing the activity, you're thinking about that.
Yeah, I'd be thinking about it. I would think constantly about how I could get faster and stronger and everything. And if I missed a work, I'd just be antsy. Like I'd have real issues. And remember, I had a performance review at my company, and I remember them saying, it was like, I don't know, 2007 or something, and they were like, the CEO and president of our company at the time, they said, you're our superstar, you're extraordinary, you do such great things, but we're wondering where we rank on your priority list, where the company, and I helped start the company. I was one of our co-founders. It's my baby. And they're like, we think you're like the company and your job is like probably like number 8 on your priority list.
Oh.
And we're wondering what would this company be like and what success would we have if you loved this company as much as you do triathlon training?
Ouch.
Yeah. So even coworkers and family and friends,
and even if you're performing at a really high level, they're like, hey, we can see how you're giving your all to this other thing.
Yeah.
And if it's your family, then that hurts too, right? Dad is more obsessed with.
My kids, my wife too. I mean, and this is partly when we realized it was OCD, because I was like, I can't stop. Like, this isn't me making a choice. I literally cannot stop doing this. And then you throw on the vegan and the eating and all the different exercise stuff, and then and I feel like I almost always have to have something.
But I think you're extraordinary. You remind me of a very close friend that I have. That the difference between you and him is you channeled it into highly productive work, focus on things that other people could turn into money and wealth creation or preservation. Whereas most people that get this, that drags them into living in a bus, and I'm focused on making the bus be, incredible living conditions for me.
Yeah. Well, and some of them, again, like the checking the mail, I've had periods of time where I constantly check to make sure I have my iPad in my bag. Like I'd pull over on the way to work multiple times to check. I mean, there's just things like that that are just totally crazy and stupid that, aren't hugely disrupting to my life. But and I know at the time, I'm just like, I know that it's there, but I can't stop myself from checking.
So what do you know about the human mind that people that haven't had to go through this wouldn't know?
Oh, here's the number one thing. So if somebody's depressed or anxious or OCD or anything else, like they likely know, and you sitting down and rationally explaining things to them isn't going to make things better, and it's probably going to make things worse, because then they're just going to feel bad about themselves. And the key thing is, if somebody's struggling with any of those things, and I hope, and my wife and I and our kids have struggled with these sort of things. Like, we're very open about it because we want to help get rid of the stigma. So hopefully people will go talk to somebody and get help, because there's real treatments, and beyond just medications, like therapy. The right therapy can be hugely beneficial, because if you think about it, our brains all have, neuroplasticity. So, it's fascinating. So, how our brains are actually wired affects how we think, but how we think affects how our brains are wired. So my 20-year-old just spent 4 months at a kind of a inpatient, outpatient. I mean, it was an everyday, all day. They call it partial hospitalization. So she lived in an apartment owned by the facility where she was, but they could go and they weren't locked down or anything, but they had people there and they were checking on them. And then she'd spend all day at this facility, and mainly OCD, some depression. But they did this brain scan when she started, right? And they bring in this specialist like once a month to read the brain scans. And only knowing her age and gender, looked at her brain scan and said she is a 5.1 standard deviation event on OCD. Didn't know anything else about her, just looking at her scan, and said we can see the OCD portion. That's her main issue, and there's some depression and whatever. But by looking at her brain scan.
And you think that's real? That sounds like witch doctor-esque, right? Yeah. I'm not insulting him. I'm just saying like to look at it and be like, I can tell you've got this.
Well, and they found that, there's different parts of the brain where, that are responsible for, obviously that, you have the auditory processing part and the visual processing, and you have where you think and, more base things and, the fight or flight response, all that. So they're getting to where they understand different parts of the brain where you will see the physiology that is responsible for, OCD, anxiety, depression, schizophrenia, other things. And so he's able to diagnose that, knowing this. And then they did a combination of, kind of tweak some meds, but did a lot of psychoanalysis. They did something called alpha wave stimulation. They did neural feedback, which was interesting, where basically it's like this video game that she plays with her mind. So she's hooked up to all these sensors. And so like in one of the games, it would have her fly an eagle through hoops in the sky. But there's something about how it trains the pathways in the brain. They did something called transcranial magnetic stimulation, where they use kind of MRI technology, but real focused on this OCD section of the brain, which increases the blood flow that helps, something. But at the end, the brain scan was better. So like the OCD, a 5.1 standard deviation is about a 1 in, 6 million event.
Yeah, if you had that on IQ, you would be sitting pretty.
Yeah. So, we actually haven't gotten the brain scan back, but what they've described is, that it's greatly, improved. And a lot of that was just learning these new pathways of thinking in the brain, which is why she needed every day, all day for months. It wasn't, go to your therapist once a month or once a week and kind of do things on the side. It was like, here are these focused things that we're going to do, both in terms of physiology and in how you think, and it's going to change how your brain works.
What was it like to send your child as a parent off to a place where they're like, we're going to change your brain?
Yeah, it was, you kind of hit to the point where you try a bunch of different things. You just want the best for them. And we'd send her off to another, when she was a sophomore in high school, that had a huge beneficial effect. There was a place that focused on OCD. I mean, really, we're just fortunate that we were able to do it. I mean, it was incredibly expensive. It's not covered by insurance. It's out of network. We'll get a little money back. I mean, it was incredibly expensive, like years and years of college experience expensive.
Oh, wow.
And so if you look at mental health system in America, it's just completely broken. So you kind of have the flying first class, or actually like, almost like flying private. And that's what we've been able to give our kids. And then you have, that if you have decent health insurance, then you're at this lower level, like you're flying economy, but at least you're still flying. Like so many mental health facilities and professionals don't take insurance. So you're left with, some good people, but are just overbooked. And, if you get in, you're not going to get the once a week or multiple day a week thing that some people need. Maybe you're getting once every few months. And then you have people that don't have insurance or good insurance that are just out there, So I'm on the board of a school where my older daughter went, called Logos School, which is a therapeutic school for kids mainly with psychological difficulties. And 85% of them go for free because their school district pays, and like 45% are qualified for free, lunches and breakfasts and everything. So, kind of tough socioeconomic upbringings. And the great thing about Logos is there's about 100, 120 students, and there's 15 therapists on staff. So every single kid has multiple sessions a week, both in group and individual therapy. And for most of these kids, some of them with severe psychological issues, mental illness, this is their only way to get therapy, is through this school. So I'm a big fan of it. But we really need to change, I think, the conversation about mental health and how you access mental health in America, because it's so hard. It is so hard to access mental health beyond the stigma.
What would you do to change it?
Well, I think there needs to be a lot more funding. I think that I think more insurance should cover more and pay more. Again, you see, and again, it's tough. So like if you're an orthopedic surgeon, you can see all these patients per hour. And then you have your day or two that you're doing surgeries where you're making all this money. Like if you're a psychiatrist, even a private pay psychiatrist, it's a few $100 an hour. So it's, $300 or $400 an hour. But for you to sit down with somebody for 45 minutes and you're an MD and you have an office and you have to worry about insurance and everything else. Well, I guess if you're private pay, you're not, unless say you're charging $400 an hour. Like you're making nowhere near what a surgeon or probably even primary care physician is making. I mean, you just can't do it. So that's why they're private pay. And if you take insurance, you're not even going to give somebody 45 minutes. You're going to be in and out. I've been to those psychiatrists before. You come in, they talk to you for 15 minutes, they write you a prescription, and you're out the door.
Well, that's why Ann in physical therapy her clinic doesn't accept insurance because
exactly.
they said, look,
we can't
the
do
only
it.
way we can do it is if we treat two people at the same time. We only have 45 minutes, and the amount of paperwork we have to do doubles that amount of time.
Yeah, so it's broken. So I think the reimbursements for mental health need to be higher. And it gets into health insurance and how we pay for medicine in America, which is completely broken. I mean, it's all of medicine, but mental health, especially. So, I'd like to start a charity. My wife and I have chatted about this, where we helped fund. There are things that help people without insurance or things get some mental health, and there's some clinics and some different things, and those do great. But I'd love to give everybody the ability to fly first class at least, because I think that's so beneficial. And I just see the huge change in my daughter after her 4 months. And again, this wasn't the first time we've done programs and different things for either of our kids. I would just really like where everybody can tap into really getting the mental health that they need.
John, when was the last time you laughed really hard?
Last night.
Tell me about it.
Yeah. So I'm going on a cruise later today. And in fact, I'm not going to tell you the laughing really hard. I'll skip that one. Okay. Earlier this week, I spent 3 hours watching Beavis and Butthead. And my wife came down, and one of my daughters was on FaceTime, and they were going to ask me a question, and I was laughing so hard I couldn't talk watching Beavis and Butthead. So, yeah.
I never connected with that show. I mean, I like Mike Judge. I think he's hilarious. I think his sense of humor.
Oh, I've always loved Beavis and Butthead. Just absolutely love Beavis and Butthead.
You were probably of the age where you were allowed to watch it on MTV.
Oh, I'm 52. So I was.
Yeah. Oh man, I would have gotten in so much trouble if I had been.
No, I love Beavis and Butthead. So, yeah. No, I laugh quite a bit. I have a lot of fun.
Well, you got a book coming out.
I do.
When is it coming out?
So, unfortunately, it's not going to be published till May 2nd. And I finished writing around the middle of April. And I read all these books on writing a book, a nonfiction book. And then I read these books on, publishing and all this research on picking a publisher and everything. And this one book said explicitly, like, if once you're done writing, you're halfway there. And I'm finding that to be the case. It's just it's a lot of work. Mostly it's the publisher's work, but there's a lot of work to get it done. And then you have, marketing. There's supply chain issues. It's running about 90 days between the publisher being done with all their work and it actually being printed, because the printers are running so behind. I'm not alone. I heard Britney Spears' book was hugely delayed because of supply chain issues. So, me and Britney right there.
And describe it. We talked about it the first time back when you were writing.
Yeah, so it's called The Uncertainty Solution: How to Invest with Confidence in the Face of the Unknown. And so it really focuses on not how to invest, but how to think about investing. Because there's no one right way to invest. And, whoever reads the book, I won't know them. I don't know what their goals and wants and desires and cash flows and risk tolerance and level of sophistication is. I can't tell them how to invest, but I can help them think better about investing, to have better investing behavior. And actually the book, I've had a number of early readers say, this isn't really a book about so much about investing. It's really about how to think better. And anyway, I'm very proud of it. I think it's good. I've had people that have read it that have nothing to do with the investment industry, including my 23-year-old daughter who's getting her master's in English. So I asked her to read it, and she was like, "Oh my gosh, I thought I was going to read this, just because you're my dad and it'd be boring and on investments." She's like, "I actually loved it. I learned a lot." She read it in a day and a half. So yeah. So I really didn't write it because it's not so much that I'm like, oh, I want it to be a bestseller or anything. I think anybody that reads it will have more money 20 years from now. I want to help people. And I think the financial industry is fraught with conflicts of interest and complexity, needless complexity, and obscuring what's important. And my goal professionally is to spread truth and transparency, not just in investing, but in other areas. And this is one of those books I've had, again, early readers that have read this, that have read it and said, this book is just the truth.
I mean, I believe it. Like, I've known you now for several years, and I think you're a very genuine man.
Yeah,
and I think it's a rare thing. I've talked to a lot of money managers, and like, they're okay.
Yeah.
But like, I think you really are, and I think it shows through in your iPod. You have a blog that people, interesting fact of the day.
Yeah.
And that's where you got
theifod.com. So recently we have a pretty new client, and she has over $100 million, and our investment recommendation is 2 funds for $100 million. So, I think that takes a lot of confidence, because typically you'd be like, okay, I'm going to create all these different funds and this really complex strategy. But I mean, what she's going to have is this just really low cost, incredibly tax efficient portfolio. And it's going to be really easy to have good behavior. And, I've kind of run this test before with real clients, and then, over the years of, having just 2 or 3 funds will often trounce other more complex portfolios with fancy this and razzle dazzle that. And her 2 funds are index funds. So, it takes a lot of confidence to say, the right thing for you, and it's not right for everybody to have 2 funds, but the right thing for you, and you're going to pay us to be your investment advisor plus family office, which is why we can do this, is we're going to put you in 2 funds for $100 million.
John, I could keep going all day,
but
I think we probably better wrap it up.
Yeah.
And thank you so much for coming on the podcast.
Thanks for having me. Anytime. I love talking with you.